Thank you, Grady. Thanks very much, Reed Corporate, for putting on this event again, and thank you all for attending. It's great to be back here. New World acquired the right to the Antler Copper Project in northern Arizona just on over 3 years ago, and it's been a phenomenal success period since. Then, about 12 months after acquiring the asset, we'd been drilling for 9 months, and indeed we've continued to drill for the next 2.5 years after that. But after just 9 months of drilling, then I stood up in front of this audience, albeit virtually from Perth, when we couldn't travel because of COVID, and I declared at the time that in our mind it was just a matter of how big is this mine going to be, not are we going to be developing a mine. And indeed, over the last 2 years, we've subsequently expanded the resource base, declared 2 JORC resources, now declared 2 scoping studies on the development of the project, and we are pushing the Antler deposit to production, and it's going to be a very low-cost development proposition because of the extremely high grades. Just corporately, I too believe that New World is heavily undervalued. We've got a market cap of $80 million, about $5.5 million cash at bank, and on a very steep pathway to deliver a low capex, high margin copper development story at a time when the world is becoming increasingly dependent on copper. In terms of our project, we're located up in northern Arizona. It's an exceptionally good place to be developing a mine. It is extremely sparsely populated. We're between our project and the town of Yucca, 15 kilometres away, along a road that has been in existence there for 200 years. There's 9 dwellings along that road. And when I say dwellings, then half of those people are living off the grid. So they're living with no power, no running water. So it is very, very sparsely populated. But we are only an hour and a half from Las Vegas, which is a real hub. We're only 40 minutes from the town of Kingman, where there's 30,000 people in it, which is where we base ourselves from. Our operations are based in Kingman. And indeed, to get to the project, we drive down an interstate highway that brings us within 15 kilometres of the project. And along that interstate highway, there's also transcontinental rail. Fantastic infrastructure. Not only that, northern Arizona, and indeed Arizona itself, is one of the best places to be developing a mining operation. The Fraser Institute in 2022 regarded Arizona as the 7th most favourable jurisdiction in the world to develop mining operations. So very, very pro-mining. 70% of the US's copper is produced in the state of Arizona. So very much pro-copper mining. Where we are surrounded by several mines, including the Moss mine, which is located about 50 kilometres to the west of us. The Moss mine is an open pit, heap leach gold mine using cyanide, mining pits and having leach pads on federal lands, and in 2020 that was fully permitted for operations after an 18-month permitting process. So again, very, very supportive of mining in this part of the world. Just zooming in on the project area, then on the left-hand side here in red, then we see the interstate highway that leads south from the town of Kingman. And 15 kilometres to the west of the town of Yucca, there's only 100 odd people living in the town of Yucca, but 15 kilometres to the west of that in the yellow parcel of land, then we control about 4,000 acres in and around the Antler deposit. The Antler deposit itself sits on privately owned land, and in the US that is really, really important. So the yellow parcel of land is land that New World owns outright itself. Immediately to the south of that in red, and also to the east of that in red, is additional privately owned land. And New World has a 4-year option to purchase that privately owned land. This is very, very important because we intend building all of our infrastructure, the mine, the processing plant, and all stockpiles and waste dumps and tailings facilities on that privately owned land. And that is going to really help us streamline permitting. In terms of historically, then Antler was discovered in the 1880s. In the early 1900s, a small incline shaft was developed in the footwall of the deposit. The deposit dips to the west at about 60 degrees. And that incline shaft was developed through until 1970, down to a depth of 200 metres. But there was only very, very modest historic production. Historically, only 70,000 tonnes of ore was mined from Antler, just selectively taking out the thickest and highest grade mineralisation, or mined from underground, but that ore was extremely high grade. It averaged 3% copper and 6% zinc, or almost 5% copper equivalent. And that's what attracted us to the project. There's an adage in the mining industry, grade is king, and indeed in this case, the grade is phenomenal. And the grade means that we can develop a very high grade mining operation and a low cost mining operation for modest capex. But most significantly is that prior to our involvement, the most recent work done on the project was 1975. And at that point, mineralisation was open in all directions. Even though there was only historic production of 70,000 tonnes, we saw scope to define a much, much bigger and a very high-grade resource. So we commenced drilling in March 2020, and we've drilled for 37 months since. We declared an initial resource in November 2021, and on the right-hand side here, we're showing a grade thickness long section. So this long section is multiplying copper equivalent grade times the thickness of the intercept. For example, if we would intersect 5 metres at 2% copper equivalent, then we would plot that up as 10. Now, the codes on this, or the colour codes on this long section, show greater than 10 copper percent metres in yellow, greater than 20 copper percent metres in orange, greater than 40 copper percent metres in red, and greater than 60 copper percent metres in magenta. So we see a continuous mineralised lens over 600 metres of strike going this way, and over more than 850 vertical metres, including some exceptionally thick high-grade mineralisation. Universally, this deposit is high-grade. But there are two zones that we call on the left-hand side the main chute, and in the central portion in magenta, the south chute. There's two areas that are particularly thick mineralisation that are consistently running greater than 60 copper percent metres. So to fall in that categorisation, we need 15 metres at 4% copper equivalent, or 10 metres at 6% copper equivalent. Now, indeed, in those magenta zones, there's intersects that grade up to 182 copper percent metres. So extremely thick, extremely high-grade mineralisation. We've progressively drilled deeper and deeper underneath the Antler deposit and consistently intersecting thick high-grade mineralisation. Over the last 12 months since declaring our maiden resource, then we see some of the intercepts: 42 metres at 3.8 copper percent metres, 10 at 6, 18 at 2, and the very deepest hole in South Chute today, 21.5 metres at 5.5% copper equivalent. In the adjacent high-grade South Chute, the deepest holes there, 27 metres at 7% copper equivalent and 10.5 metres at 13.7% copper equivalent. Phenomenally thick, phenomenally high-grade mineralisation. Just late last year, we updated the JORC resource. So it was our second JORC resource that we declared on the project. At a 1% copper cut-off, the resource comprises 11.5 million tonnes at 4% copper equivalent, 4.1% copper equivalent. Now, we can declare a resource. Most companies would aspire to be intersecting mineralisation that's 2% copper equivalent. We can declare a resource if we dismiss all mineralisation less than 2% copper equivalent, then we still have 9.8 million tonnes at 4.5% copper equivalent. So this is extremely robust. Doesn't matter which way we look at this, it is a very high-grade resource. So we've undertaken a scoping study to evaluate the development of that 11.5 million tonne resource. Deliberately, we are going a very low-impact mining approach. We are going to go underground only. Because of the extremely high grades, we want to recover 100% of the ore body, so we need some fill material, and we are going to return 50% of the waste product, the tails, back underground as paste fill. It will be a very, very small but high value mining proposition because of the extremely high grades. So this scoping study sees us with a proposition where we can mine 15.5 million tonnes over the course of 13 years at a rate of 1.3 million tonnes per annum at a feed grade of 3% copper equivalent. So that's a diluted grade, that's after dilution with mining. We see 10 years of steady state production at or around 1.3 million tonnes per annum. This mine design sees 93% of that resource base captured into a mining inventory with an additional 4.5 million tonnes of dilution. Over the course of that operation, then we would produce almost 400,000 tonnes of copper equivalent metal. This is a polymetallic deposit, so there is value to be realised from the copper, the zinc, the silver, the gold and the lead, but about 50% of the value comes from the copper. So over the course of this mining operation, we will recover about 190,000 tonnes of copper metal. Annually, this sees a production profile of about 33,000 tonnes of copper equivalent metal, half of which is copper, so about 16,500 tonnes of copper in concentrate. We can do this for relatively modest capex of $252 million US. Now, the $252 million US includes $100 million for a processing plant that's capable of consistently processing at 1.5 million tonnes per annum, so a little bit bigger than we're currently contemplating. We're contemplating a production profile of 1.3 million tonnes per annum, but deliberately oversizing the processing plant so we can have growth with further exploration success. The mineralisation remains open in all directions. Equally, that $252 million capex has recently been factored and escalated for recent inflation, and we do include $44 million of contingency in that. In terms of operating costs, this will be a low-cost operation. Because of the grade and because of the lateral and vertical continuity of the mineralisation and because of the thickness of the mineralisation, we can be developing a very small single decline mining operation with an operating cost of around about $75 a tonne. Now, because of the credits from particularly the zinc, but also gold, silver and lead, then this will position us to have cash costs of negative 50 cents a pound of copper. So the 16,500 tonnes of copper that we produce each year will be coming for free. The co-products pay for the production of the copper. Negative 50 cents a pound equates to negative $1,100 a tonne. So if the copper price is $8,500 a tonne, which is about where it is today, we'd be realising a copper price of $9,600 a tonne for those 16,500 tonnes of copper in concentrate that we produce each year. It is an extremely high margin proposition. Indeed, over the course of the operation, we anticipate generating 3 billion or over 4 billion Australian dollars or 3 billion US dollars of revenue, of which half is free cash. That's free cash after pre-production capital and after sustaining capital. So the project, as it stands at present, generates 1.5 billion US dollars of free cash over that initial 13-year period. Annually, that sees us generate free cash of about 153 million US a year, or over 200 million Aussie dollars a year, all for a market cap of $80 million. And the NPV on pre-tax, but on a discounted basis, is still 835 million US dollars. So the outcomes of the scoping study mean that we are clearly pushing this project to production. But equally, there remains considerable exploration upside at the project. We've demonstrated the financial impact of additional discoveries when we increase the resource base by 48% over the last 12 months. We've increased the NPV of the project by 59%. So we will continue to explore, but we are firmly pushing Antler into production. Antler is a VMS deposit. These VMS deposits typically occur in clusters. To date, we've only drilled at 600 metres of strike, down to 850 metres depth at just one of our targets, and we've consistently hit high-grade mineralisation. 6 kilometres away to the northeast, there's another little VMS deposit called Copperwell. So there's 2 VMS deposits in this belt, and indeed we've got lookalike targets between us and Copperwell that we will commence drilling in the next 3 to 4 months. So from here, we are taking Antler to production. We are submitting mine permit applications next quarter. We will continue to de-risk the project by completing a pre-feasibility study by the end of this calendar year. That will roll into a definitive feasibility study next calendar year with a view to commencing construction of the decline in advance of production late 2024. Thanks very much.